earnings and fell crazy. Crazy thing is, back to the levels, man. So I had these levels already marked out. This was a support level that was initially for me, but I said, hey, there's more likely that we pass this support level and don't bounce here and go lower to this one, because this is really where it started, right? So 1490 is that prime time support level. You see we bounce each time. This is that zone. This is a demand zone, right? We came down here and smacked it down right there and it rose right back up. So they ended up gapping down over their earnings, man. So let's talk about the results, bro. Net income, they reached $157 million for the quarter, right? That was their net income. Their adjusted EBITDA, right? It rose 44% to a record $358 million.
What is that?
So we're going to talk about what that joint is. EBITDA, they call it like EBITDA, stands for earnings before interest, taxes, depreciation, and amortization. You know what amortization means off the rip?
Amortization. Let me read it. Let me look at the
right
word
here.
Nah.
Let's look at what amortization means. You want to read it?
The action or process of gradually writing off the initial cost of an asset. Okay. The action or process of reducing or paying off a debt with regular payments. Okay.
So
amortization.
Amortization. It is a metric used to measure a company's overall financial performance and core operating profitability by removing the impact of financing decisions, accounting choices, and tax environment. So that is what the EBITDA stands for, right? So it rose 44% to a record of $358 million. Loan organization. So their loan organizations hit a record of $14.8 billion, and their deposits grew by $5.3 billion to reach $45 billion by the quarter end. So they got more people putting money into that account, right? You know, I put money into the SOFI account, you know, so member and product growth. So this is the really important part, because I'm not a subscriber to SOFI Plus. I believe they got it, but they got SOFI Plus and you get perks. So they got a total members increased by 35% year over year to 15.8 million, adding 1.1 million new members, right? They got total products. Their total products grew 42% to 24.4 million products across the platform. Segments like SOFI Money reached 7.9 million products, and Relay reached 8.0 million. I think their SOFI Money is like a kind of like a podcast, like blog type of thing.
Okay.
I could be wrong, but
I was gonna say, because what are they subscribing to necessarily? And you said they come with perks.
Yeah, it's like SOFI Plus. I believe you get extra stuff. I haven't really looked into what SOFI Plus really has, but the stock reaction, despite the beat and the raised guidance, right? So despite all that stuff, they beat everything across the board, right? It fell roughly 8.6% following the report as investors reacted to the steady profit projections and a 23% drop in tech platform revenue due to a major client exit, right? So that ended up dropping the shares a little bit, even though they beat. But personally, I think this is just, you know, with SOFI, it's not a proven company all the way. So this is a riskier investment. But if you have, you know, say $50 out of a, you know, $200 you want to invest, or maybe you got a little extra $100 and you want to be a little bit risky with it, you know, you can get some shares at this level, right? Buying these companies matters at the level you buy it at. You got tremendous upside if you end up putting, you know, buying it right here at $15, and then you get back to where it gets to at the all-time highs of $32. That's 117%, you know. So, you know, that's not, for a great company that's growing, I personally don't think that's too bad of a bang for your buck, right? You can get into the investments without it being very expensive.
Exactly. And this is a prime level too, so shit, within this nice little range right there, that's a great buying opportunity. Just like you said with that $50, that's 3 shares.
Man. Exactly, man. So hey, you guys take advantage, man. Take advantage. You want to look at Netflix real quick? I just thought about it.
Yeah.
Before we get into the Fed, let's see it.
Looking at the Netflix, we had earnings today. I was this week. Oh, last week, Thursday. Okay.
Oh, okay, yeah.
Cool.
Oh, we did break that down.
I think we did break that down, low key.
See, look, now you got at Netflix rising from 65 to 73.
Right off the good level. Right, let me zoom out. Let me zoom out a little bit. See what the level is. Okay, that's nice. Got the nice tap. Tapped a little bit, not all the way touched, but yeah, nice clean rejection off the $65 mark right there. We're up. Was that $8? Just from that initial bounce.
Yep, nice 12%.
12%. Right under 13%. That's a nice little move right there, especially because we know that Netflix is coming from $130 stock price at the high. There's a lot of upside to go, and there's a lot of room. We're gonna go to current price. Oh, we good. Current price. Ooh, 80%. We there. It is right now. You know, I was seeing something, and we've already talked about this multiple times, but just the fact that this year is accumulation year. You know what I'm saying? We all of there's nothing but, there hasn't been anything but opportunities to get into these companies and these asset classes at a discount price. Whether it's undersold or, you know what I'm saying, there ain't nothing but buying opportunities. It's kind of fire. Yeah, last year we wasn't looking like this. We was kind of moving up last year. We was moving up. Mm-hmm. This year it's like this, you know, like right in the middle. You know what I'm saying? We in that good range with a lot of these companies and a lot of these cryptos. It's a lot of opportunity, man. You got to take advantage of the opportunity to get in, because there's gonna be a time where companies or stocks like SOFI, you're not gonna necessarily be priced out, but the ability to get a whole share will be kind of like harder. You got to put multiple investments in instead of just copping one. Like, for example, Micron, it was $1,000 stock. Mm-hmm. Obviously, they were low at a point in time, but not a lot of people have $1,000 to get one share at one time. They may got to break that up. Preventing that is you getting in early and looking at these opportunities and studying the market, taking advantage of the things that you see. It's a prime level right here. We've already dibbled and dabbled between this level right here, and we see the upside since the last time we've been here. Look at it broke below, but from this level all the way up to this level, I don't even need to do that. It's easily 130%, 140%. Take advantage, man. Get in while you see this stuff, like see stuff like this right here. You see the memories, they're all moving lower, inching lower to prime support levels. Get in there, man.
Yes, sir. If you're paying attention, it's right there in front of you, and hopefully you've been taking advantage, man. So back to the SPY, you know, we